Alright, gang. It's your boy Nature, aka Nature. Alright, gang. So we back for another video. How to use Fibonacci retracement with Japanese candlesticks. We just went over that. Alright, so y'all know how to use Fibonacci retracement with Japanese candlesticks. Alright, so gang, we're going to go over the next lesson. So in the next lesson, we're going to be talking about how to use Fibonacci extension. So we just ran over everything about how to use Fibonacci retracement, whether it be Japanese candlesticks, whether it be trend lines, whether it be support and resistance, or just Fibonacci retracement. We went over all of them. So Fibonacci extension is different than retracement. Fibonacci retracement is about finding entry points and finding like sniper points, finding sniper entries. You use Fibonacci retracement to find entries, because the theory is that price will, once in an overall trend, whether it's an uptrend or a downtrend, the theory is that price must retest or retrace. And that's why we got the Fibonacci retracement. It lets you know where to enter once price retraces. Alright, so that's everything about Fibonacci retracements. Alright, as far as like Japanese candlesticks, trend lines, support and resistance. Alright, so now we're going to go over how to use Fibonacci extension and to know when to take profit. So Fibonacci extension is a tool that allows you to find out where to take profit or when to take profit. Alright, so let's check this out in our next lesson. Alright, gang, so how do you use Fibonacci extension to know when to take profit? The next use of Fibonacci will be to use them to find take profit targets or take profit levels. Alright, so when in doubt, know your way out. So let's start with this example of an uptrend. In an uptrend, the general idea is to take profit on a long-term trade or long trade at a Fibonacci price extension level. Okay, so to find take profit, we need to find out the Fibonacci price extension level. Okay, Fibonacci retracements to find out where to enter price, to Fibonacci price extension levels, or this Fibonacci extension levels are used to find good ideas to find take profits. Okay, so this is usually found on long-term trades. So you determine the Fibonacci extension level by using 3 mouse clicks. The first click is the swing low, because we're taking this example, it's in an uptrend. So to find the Fibonacci extension level for uptrend, first thing we have to do is first click on the swing low, because you buy when it's low. So you must click on the swing low and drag your cursor to the most swing high, because price is going to rise up. Once you buy it low, it's going to rise up to the swing high. So you draw your click from the significant swing low and then drag your cursor to the click on the most recent swing high. Finally, drag your cursor back down and click on any of the retracement levels. Once you click on any of the retracement levels, then this will display, each of the price extension levels will display, showing you both the ratios and corresponding price levels. Pretty neat, huh? So let's go back to this example of US versus Swiss francs chart that we shown you in the previous lessons. So in the previous lessons, you know that this is USD versus Swiss francs. You know that price tested the 50 level. Okay, it's an uptrend, so price tested support. The 50 extension level, support level, and then it goes to the 61.8 level, but it tested 50 level and held there strongly as support, and it tested 3 times before the pair finally resumed in the uptrend. Okay, in this chart above, you can even see price rise above the previous swing high. Okay, so this is a previous example of what we already went over. Price tests the 50 Fibonacci extension retracement level. It tests as support several times, about 3 times, as you can see. 1 time right here, 2 times right here, and 3 before breaking through the 50 Fibonacci level, going back to the 38.2 level and past the 23.6 level, breaking past the swing highs. Swing highs right here. Okay, this is the swing low. This is the swing high. So price eventually breaks the swing high when it makes this marbozo candlestick. Okay, this green marbozo candlestick. So once it makes this green marbozo candlestick, this candlestick is a very bullish candlestick, meaning that price wants to continue heading back up. So once it does that on the swing high level, then we know that price will head back up. So that's what eventually price does. Eventually broke through the former highs and continue to the former swing high and continue to head up in an uptrend. So that's how you read Fibonacci retracement. Price will retrace back. If it's in an uptrend, price will retrace back to any of the support levels, whether it be 50, 61.8. Okay, price will or 38 too. Price will retest off of these areas, Fibonacci levels, as support. Okay, and it'll test off of it not just once, but twice and 3 times before actually resuming in the actual trend, allowing sellers and traders to get in. Allowing buyers and traders to get in to push before heading back up. So that's why it tests the support, because buyers are probably putting in orders right now to get back in long. So the Fibonacci does test it does test the 50 Fibonacci level and held strongly there as support. Eventually, it breaks free after testing it about 3 times and resumes in the uptrend. Okay, so let's pop on the Fibonacci extension tools to see, or Fibonacci extension levels to see where would have been a good place to take off some profit or to take profit. So this is where price broke the swing. This is where price broke the high. Okay, this is the price broke the high. This is the swing high right here. So eventually, when price breaks this swing high and heads back up, we want to find where our take profits will be. Well, there's a few take profits you could have got in because price never goes back down here. So you could have gotten right here at 1.10332. Because price never goes back there. You could have even got in at 1.089, 1.4035. Price never heads back down. So you're all in profit. As far as the price extension levels, this is when you click it. This is extension levels right here. For the uptrend, 6.18, 1,000, 1.382, 1.500, 1.618. It's just not 618. Extension levels is 1.618, 1.500, 1.382. Okay, and the regular, retracement levels are 618, 50, 3.82. So with the Fibonacci extension levels, it's a 1 into it. It's a 1 in front of it. So it's 1,000, 1.382, 1.50, and price goes all the way to 1.618 Fibonacci extension level before heading back down. Okay, to the previous extension level, which is 1.00. Okay, so this acts as support. This is resistance. This is now support. It was resistance until price 1,000 was the resistance, and 618 was support. And I don't want to confuse you, but we're going to talk about that too, also about how resistance can be support, and support can be a resistance. But this is the 1.00 is the last support, because once price breaks the 1.00 Fibonacci extension level, that becomes support. Then this is the new resistance. This is the new high. Okay, so that's also important. You could have took profit at any of these good levels at 618. You could have took some profit off, or you could have entered around there. You could have entered at 1.00 before price even 1.00. You could have entered or took some profit off, and at 1.618, yeah, you could definitely take some profit off, because that's the highest price went to before heading back down, and we don't know if price will just test this as support. We have to get our Fibonacci retracement to see if price wants to to find out if price wants to retrace this as support, or to see what's the overall trend. Cause price could head back down to 6.18, 5.00, 3.82, and head all the way back down to the swing low, which is right here. Price could head all the way back down to the swing low. Okay, that could happen. So in this example, though, we're just focusing on prices extension levels. This is price extension levels, which is 1,000, 1.382, 1.500, 1.618. Okay, so it's a tool that allows you to find or find some good take profits, or to find or where to take off some profits. So here we recap of what happened after the retracement of the swing low. So accordingly, what happened was that price rallied all the way up to the 61.8 level, which lined up closely with the previous swing high. You see, this is the previous swing high. This is the 61.8 level. This is the previous swing high. This is the swing low at 1.0132. Swing high at 1.899. That's the Fibonacci retracement level. It was retracing off the 50 level. Remember, it was retracing off the 50 level. It finally went to the 0.618 level before breaking through. So it eventually goes to the 61.8 level, which lines up closely with the previous swing high, as you can see right there. It fell back down to the 38.2 level, where it found support. Then price rallied and back up and found resistance at the 100 level a couple days later, at the 1,000 level a couple days later, and a couple days later after that, price eventually rallied back up again before finding a new resistance at 161.8 level. Not this 61.8 level, 161.8 level. So we could have used our Fibonacci extension level to find out where price would eventually go. So as you can see from the example, the 61.8 and the 100 and the 161.8 levels are all would have been good places to take some profit or take off some profit. Okay, so now let's take a look at an example of using Fibonacci extension on a downtrend. So in a downtrend, the general idea is to take profit on a short trade at a Fibonacci extension level, since the market often finds support at those levels. So let's take another example of a downtrend on a 1 hour Euro USD chart we shown you in the Fibonacci lesson before. Alright, so this is the recent downtrend that we had looked at before. Alright, as you can see, look at buyers were exhausted. This is exhausted candle. Remember, this is from the Fibonacci retracement with Japanese candlesticks. So once you know how to read Japanese candlesticks already, we already ran over everything about Japanese candlesticks. Once you see a doji form as a Japanese candlestick on top of a Fibonacci retracement level, so it formed at 0.618. Once that form, that exhausted candlestick form, it allows you to know that price is heading back down. Okay, and sellers are coming in. You can see all these red candlesticks letting you know that sellers just came in and pushed price back down, all the way back down to eventually to reach the swing low. Okay, so this is the swing high, this is the swing low. Okay, in a downtrend, you draw from the swing high to the swing low. In an uptrend, you draw from the swing low to the swing high. So eventually, price reaches back down to the swing low right here. Price eventually reaches back to the swing low after making an exhausted candle, Fibonacci candlestick at 0.618. Fibonacci retracement level. So this is what we previously went over. So here we saw a doji form just under the 61.8 Fibonacci level. Price then reversed after forming that doji, and sellers jumped in. You can see a lot of red candles. Red meaning sellers, green meaning buyers. So after it, informed that doji on the 61.8 Fibonacci level, price then reversed, and sellers jumped back in and brought price all the way back down to the swing low. So let's put the Fibonacci extension tool to see where would have been some good places to take profit had we had shorted at the 61.8 retracement level. So here's what happens after the price reversed from the Fibonacci retracement level. So price found support at the 38.2 level, the 50 level. It held as initial support too. Then became an area of interest. Then price went all the way to the 61.8 level, also became an area of interest before price shot that back down after making that Fibonacci doji, candlestick doji on 61.8 level. Then after that, price shot back down to the previous swing low. If you look ahead, you'll find out that the 100% extension level also acts as support. We could have taken profit off at the 38.2 level, the 50 level, and the 61.8 level, as these levels act as support, possibly because of other traders. Other traders are also looking at those Fibonacci retracement and extension levels. Because other traders were keeping an eye out on these levels too, this would have been good level for taking profit. So this example illustrates that price finds at least some temporary support or resistance at Fibonacci extension levels. Not always, but often enough to correctly adjust your position to take profit and manage your risk. Of course, there are some problems to deal with here. First, there is no way to know which exactly Fibonacci extension levels will provide resistance. Any of these levels may or may not act as support or resistance. Another problem is determining which swing low to start from creating the Fibonacci extension level. One way is from the last swing low, as we did in the example, is the lowest swing low of the past 30 bars. Again, the point is that there is no one right way to do it, but with a lot of practice, you'll make better decisions of picking swing points. You will have to use your discretion in using the Fibonacci extension tool. You will have to use your own judgment and how much longer the trend will continue. Later on, we will teach you methods to how to determine the strength of a trend. For now, let's move on to stop loss placements. So in our next lesson, we're going to go over how to use Fibonacci to place your stops, so you won't lose your money. You can lose less money. So this is the downtrend too. I know we ran past the downtrend with the Fibonacci extension levels. I just wanted to read that so you can kind of get an example. So we could have got in right here. You would have got in right here. You would have been good. You could have got in 3363. The price never heads back down to these levels. It does go all the way to the swing low. We know price is going to retrace, so you could have got in right here at 1.3094, 0.382, the 50 level, or the 0.618 level. All these levels provide some type of support. So this is support. This is support. Price will retest back to one of these levels before heading back down. This was actually resistance. These are like resistance. Right here is resistance. A short resistance / support before price heads back down. So this would have been some good. If you would have got in right here, it would have been good to get take some profit off right here, or at the 0.382 level, the 0.500 level, or the 0.618 level. Because once it goes back to the previous swing low, we don't know what price will do. Okay, we have to wait and see where price wants to head next. So the Fibonacci extension tool is a good tool to use. It's just like the Fibonacci retracement, except that it allows you to find, where where you could find good levels to take off profit. Okay, gang. So I hope this video helped. In our next lesson, we'll go over how to use Fibonacci to place your stops, so you lose less money. So this was how to use Fibonacci extension, and to know when to take profit. All right. So, gang, it's your boy Nature, aka Nature.